Hello and welcome back. Hope you're good and doing well, guys. So, having this weekly market outlook after a long time, and let's just straight away look at to the to the charts to the market. All right, let's look at the update. I hope that you can hear my voice. Voice is okay. Do you hear me? Yeah. So just type it over there, or yes or no, if you hear my voice. Or if it's too low, then just type it over there something so that I can understand that yes, you can hear me. Okay, thank you very much. So let's look at that. I'll bring a couple of charts to just look at them so that you guys can get the idea that what we were expecting, all right, here in the last week, and what we can see next. Just quickly let me bring the old chart. Okay, so this chart last week when we saw that the gold dropped significantly, all right, and the update is here on this chart. Okay, so I'm gonna look at this. All right, so what we got a very nice aggressive drop. Okay, so these charts are inverted, just make sure you understand that. All right, so we are having these charts inverted for the dollar CAD. All right, for dollar CAD. Okay, so these charts are inverted, just to make sure you understand that. So we got a nice aggressive sell-off on the gold. Gold dropped from 34.42, went up to right now gold is running at 33.36. Yeah, so hitting that low, even lower than that price. Okay, so we got a nice lead. Okay, this was the nice lead, which I was saying all the time to you guys, that watch it, and this is our lead, and we can see the movement based on that, and that can lead us that where prices can go. All right, so gold dropped significantly. That was telling us, that was suggesting that oh, so hopefully that hopefully guys, that the stream is okay, no lagging. I can see there that it's showing me that there might be a, hopefully stream is okay. Yeah, stream is all right. Okay, so voice is too low. Okay, I'll just pick it up a little bit because it's okay. So let's go on. All right, so what we were, just type it over there and text if you see any lag or any, if screen stopped moving. I can see that there is an error showing me on YouTube, says error. Yeah, but if there is anything, just let me know. Okay, so this is what we were having. All right, so I will, okay, gold, you can see there all others, dollar was falling against all others. Australian dollar went up, New Zealand dollar went up nicely, pound dollar went up nicely, euro went up. All right, so all these charts were following the copper. You know that there were tariffs applied on the copper. All right, okay, so copper was, that there was tariff applied by the Trump on copper, making all-time high. Yeah, so basically on this chart, what we need to understand that is the gold. Okay, gold made all-time high at 35.40, yeah, somewhere close to that price. Okay, the gold was the leader. Okay, now what's happening right now, we're going to look at those charts. The silver is catching up the gold. Okay, silver is catching up the gold, heading towards the all-time highs. all right. And copper is also already all-time high, is specifically after having the tariffs from the Trump, all right, so heading towards the all-time, making new all-time high, all right. And currencies are also catching up. Currencies are also, I mean, there is a very significant risk that dollar can fall, a big fall, big fall can happen. We're going to compare these charts, we're going to look at them, and we'll see how far they can go, right, how far dollar can fall. But this is for short term, all right. So last week trade setups we had, so I'm just talking about that. But so later on we're going to talk about the bigger time frame, weekly time frame, up to which dollar can fall in longer run, up to which level we're going to have the risk of dollar falling, all right. So gold was a nice lead, all right. Then we got silver dropped aggressively, all right. And copper is also falling, so copper is also dropping. So we got a lead on these three commodities went lower, all right. So commodities went lower, then we saw that the dollar CAD started to catch up, all right. Dollar went up and CAD went lower, all right. And right after that we saw that the pound started to fall. We can see even there the pound was catching up the gold move, all right. And pound went up, went lower, all right. And then we saw the Australian dollar. Yeah, I was shouting that, guys, you are shorting the Australian dollar, you're shorting the Australian dollar, all right. And New Zealand dollar was also a good sell opportunity, by the way, all right, because pound was way ahead, so we ignored the pound, all right. We caught up the Australian dollar, we caught up the New Zealand dollar, and last night we caught up the euro dollar as well. Yeah, so euro dollar was holding the highs because of the trade trade optimism that US and EU gonna have a trade deal. So this is what happened, all right, last week. Okay, if I'm gonna look at the next chart, there we can see that clearly gold was further falling, all right. Pound was exactly catching up that, all right. And then dollar CAD started to follow, all right. And then other currencies were also catching up, and euro was still sitting at that top, all right. Euro was still sitting at that top. And then what happened on the next chart, if I'm going to look at the next chart, all right, bang, so gold stopped falling. Yeah, this is the recent one, gold's recent chart, updated chart. And then bang, silver also went aggressively lower, the silver, and then we can see that the dollar CAD also went lower, okay. And we can see that since last night Australian dollar is catching up, New Zealand dollar is also catching up. Pound went even lower than the 17th of July, the July which we were targeting, all right. And now we can see that the Australian dollar, euro dollar is also catching up. So this is the chart which I was saying to you guys, that this is the important chart, keep eyes on that. And glad that we got some good opportunities, all right, on this chart, all right. So the next most important chart you need to keep in your mind is going to be the gold, all right. Gold crosses, that will tell us that what we're going to have the next, all right. So I'm gonna look at that gold chart. So you're watching gold chart, and specifically the yield, all right. Yield is slightly jumped up. Let me fix this, all right. So let me open that. So we're gonna look at the gold on this chart, okay. So we're gonna look at that gold. So here we can see that, so this is my canvas is bigger on all these. So if I'm gonna adjust the canvas, I have to adjust that so that you can see that a bit clearly, and then again I have to readjust it later on for myself. So 16 gonna be okay. So here you are keeping close eyes what's gold is doing next, So we are here, guys. I'm not I'm not being anywhere. All right, so I'm here. So trading. All right, so trading. Okay, so here we can see there that the gold dropped from there. Okay, so gold dropped from there to there on went up. I mean, testing the 17th. Yeah, so even broken below that 17. All right, we can see there that the gold against the euro is more weaker. Okay, broken below that 17. All right, and we can see there that the gold is jumping back. Gold is pushing higher against the euro. All right, so why this is happening? Because euro is falling right now. Okay, what happened first? We saw aggressive drop on gold. Okay, and euro was holding that high. You remember that euro was holding that high. Now euro is catching up the gold. Euro dollar is falling. All right, and here euro is also falling against the gold, and small push up is just happening over there. So we need sustained push up on this, all right, to confirm that yes, the gold is ready to buy for upside. Okay, if we see that the further push up, all right, this goes back up, which I don't think so gonna go that much far away at the moment, all right, because Fed is just coming over there. Yeah, so till then a dollar can stay stronger, so there is no reason at the moment you know, that kind of sharp moves to happen. All right, not a solid reason. But yes, that's what you are watching. If you see that the gold goes back up significantly against the risk on currencies or other currencies, all right, then obviously we're going to see that the gold also going to rise against the dollar, going to be a sign that the dollar is going to fall in coming days. Yeah, that's what I was saying in the group. Okay, so if I'm going to remove and I'm going to look at them one by one. All right, so you can see that the strength came over there on the gold. So it's an early sign that the gold might be, you know, $30-40 move. Okay, $40 move on gold against it. So here we can see that we don't have a, you know, I mean, we are still away from the 17th of June. We haven't broken down that 17th June low, means that there is still a risk that the gold slightly can push before we're gonna go back up. All right, so not buying yet, okay, but we're gonna look for this buy opportunity once we're gonna see that yes, it's ready to go up. All right, so little sign you have just seen over there that the strength is coming on gold here at this area. All right, so not exactly on this, as we can see that the pound is still weaker. All right, so trying to find a floor over there, gold against the pound. Okay, yeah, still I mean some strength came over there. Okay, trying to find a floor. The next move, I'm talking about the next move right now. All right, what might be the next move? Okay, some strength came over there. Here we can see that 55.22 went all the way up to 56. All right, a nice decent move. Okay, so the biggest move on the gold we have seen here. All right, so we saw that 65. All right, $65 move came over there. Okay, so this is what we're gonna look for. We need to see these gold pairs to rise further for upside. All right, gold against euro, pound, gold against CAD, and gold against New Zealand dollar, and gold against Australian dollar. Then we're gonna look. Then we will start looking for buy gold against the dollar. Okay, not yet. We are waiting, looking how these charts are doing. Okay, so this is what we're gonna keep close eyes. Hopefully you understand that. All right, now let's look at the charts one by one. Okay, one by one. We are still bullish on the dollar. All right, we were expecting a euro to drop. Okay, euro to drop, looking for last night it to sell. All right, I wasn't expecting gap up. All right, but gap up came over there just because of the deal they reached. All right, and then we were expecting it to draw from there, and nice drop, aggressive drop is happening over there. All right, so where is the 17 July low? Here is the 17 July low. Okay, Fed still to come. all right, and there is still a chance that we can see that the further sell-off can happen over there on euro. All right, so this is what I was saying here. Okay, if we're gonna get a pullback over there, okay, so somewhere close to these highs, or nice flag comes over there, okay, we're still looking further down, so I'm still looking for sell opportunities over there. So I can see that the pound is slightly bouncing back from the lows, as I said earlier. All right, is a sign that we may get a pullback. All right, so I'm gonna bring the chart. So we can say that the dollar move is almost over. Okay, the dollar move is almost over. So here we can see there. All right, so there we can see. Okay, so pound is gaining nicely against the others. All right, and the pound is not gaining against the dollar, so it might be a sign that the move is done on the pound. All right, the pound sell-off is almost done, and we are, I mean, the next bullish move, buying is ahead. All right, so we're still gonna look for pound, a euro. Okay, if we're gonna get a pullback on the euro on 3-minute time frame, okay, we're still gonna keep chasing it to the downside. We'll keep selling on it. Okay, so yeah, I'm gonna start from the DXY from bigger time frame. All right, and then I'm gonna come back. So that's the only chart. All right, so the euro dollar chart, we are still chasing to the downside. All right, we still got a room on that 3-minute time frame. Any pull, the chart just I just shared, you know, just shared on 3-minute time frame. There was a small trade. All right, and that has happened already, I guess. Not happened, right? So but happened on the euro went lower. All right, euro breaking to the downside. All right, and pound also went lower, and then bounce off nicely after hitting the 34.26. all right, and the Australian dollar also went lower, but again testing that top. So we see that the euro keep dragging lower. We may get a small trade over there to the downside on the Australian dollar. Okay, so this trade on 3-minute time frame, and similar trade we can get over there on the New Zealand dollar. Okay, so this is at the moment, keep an eye on that for a 3-minute time frame. All right, so if I'm gonna look at this bigger time frame, so we might be heading for a very big drop on the dollar. All right, so on a bigger perspective, we may see a bigger longer term drop. All right, and this can continue further to the downside for longer term. All right, maybe heading towards that 70. all right, and there are very solid reasons. All right, Fed cutting the rates. All right, and Fed cutting the rate, and tariffs. Okay, tariffs can drive that move. Okay, and we have already seen dollar has significantly fallen, specifically against the gold and silver. All right, they are leading us that we may get a bigger longer term drop on the dollar. Right, so if I'm going to look at that chart, in a while. Okay, so I'm going to remove that. Let's just remove it. All right, and let's just look at that side by side. So first, in a gold chart. All right, so gold is just one way direction. We can see over there gold is just going one way. All right, and I'm going to invert that chart. Okay, so gold is just one way we can see there. Gold is just keep rising all the way. All right, and there is a proper, you know, chance that we can see that move on the DXY up to this in longer term. All right, this is the leading move on the gold. All right, and DXY can continue to go into that direction. Maybe you can see you can't see that on this chart. All right, okay, so I'm gonna look at this is a very longer term perspective. All right, don't just go and start trading into that direction right now. You're not gonna have good trades, you know, using that time frame. This is just a longer term perspective, and make sure you keep that into your mind. So let's go to the Australian dollar and then go to the silver here. Okay, so if I'm gonna, so highly correlated, we know that the Australian dollar is highly correlated with the silver. All right, so where is the all-time high on the silver? We can see here. If I'm gonna remove that, okay, bring it to the 1 week. Okay, there you can see clearly. Okay, this chart will give you a clear picture now. Okay, this is the all-time high, this is the low. All right, and we can see the all-time high here on Australian dollar. Okay, and all-time low here at this area. Not all-time lows, all right, on the Australian dollar. Okay, and not all-time low on the silver. Okay, but lows, we can say that. All right, but we can say that the all-time highs on the silver is there on 50 or 52, and silver is just heading towards that. Okay, there we can see clearly on this weekly time frame what's leading and what's lagging. Okay, we saw a bigger drop, dollar gained. All right, we saw a bigger drop over there, silver gained. Okay, now silver is catching up gold. All right, and going towards that all-time high. So if I'm gonna pull up gold chart on that, all right, there we can see gold is still ahead. Gold is still very well ahead, and just keep climbing. Okay, still well ahead than the silver, and broken above broken above that all-time high. This is the gold all-time high, and the silver all-time high is here. All right, and silver is just catching up that. Okay, and we see that this chart, the Australian dollar is highly correlated to the commodities. All right, we know that the Australian dollar is highly correlated to the commodities. If I'm gonna pull out the gold chart, yeah, so moving opposite, gold, Australian dollar going down, and gold is going up. Okay, so if I'm gonna remove the gold, and I'm gonna pull up the silver. Okay, so it's catching up. We can see we're gonna move on to the 2 week time frame. This is a longer term perspective. We can see there, okay, what's leading us over there. Clearly silver is catching up. Okay, and some point we're gonna see that the Australian dollar also gonna go into that direction. Might be a policy mistake from the I mean fiscal policy, or you know, monetary policy. Anything can drive that. Okay, and now we can hear that there is so much pressure building over there in the US on the dollar, right? And debt is the main problem which can drive that. So more debt within the next 5-10 years, we're gonna have $40 trillion that's in the US, and they are just keep printing. They stuck into the printing cycle. They are printing more dollars to pay off their debts. All right, printing more dollars to pay off debts. Anything can drive dollar to go that much far away. All right, so there is a clear risk. Okay, now you can see that there is a clear risk for the dollar to fall significantly for longer run. All right, hopefully you understand that now. So that's a bigger longer term perspective. That's why so many talks are happening over there right now, that the euro can go up to 140 or 135 or 130 areas. That's the main reason that the commodities have gained significantly against the dollar. Dollar has dropped against the commodities significantly. All right, and currencies which are correlated to the commodities, they can catch up. They can catch up to the commodities. That's how this lag. This is a very much similar, you know, picture which you see on 3-minute time frames. All right, you see that 3-minute time frames even on 1-minute time frame. Okay, last week we saw that the gold has dropped significantly on 1 hour time frame. All right, then what happened after that? Other commodities, you know, caught up the gold. Silver caught up the gold. Copper is catching up, but not so aggressively. All right, then what happened? Okay, dollar CAD caught up the gold and silver. All right, and then we saw that the Australian dollar caught up. All right, then the New Zealand dollar caught up. Pound caught up. All right, and then now we can see that the euro is catching up. So it's the same cycle, same, you know, sequence. All right, but this is a very bigger time frame, 2-week time frame. So it's going to happen over time. On the bigger time frame, it will take a lot of time to happen. All right, but yes, it can happen very, very aggressively. Anything can drive. When such kind of divergence appear in the market, very sharp moves tend to happen. All right, and we clearly can see on even, you know, a lower time frame that the sell-off is, you know, is happening over there, but, you know, very, very slow to the downside. All right, and every time when we see that the sell-off is coming, okay, we are having buy opportunities. Okay, and we are still having the lag. All right, so let's talk about the other lag. All right, the Australian dollar is still lagging. Okay, Australian dollar is supposed to be here at this area at that price, as with compared to the other dollar pairs. Okay, we still can see this move. We cannot rule out. So less likely we're going to have that move. More likely we're going to have that move. All right, so if I'm gonna pull out the euro, all right, so euro is clearly pushing up and broken through that top, right? Broken through that top. We are still, you know, we still can see that move. The Australian dollar can go and hit that high. There is still a chance that the Australian, so dollar drop is very likely for longer term, so we cannot rule out that. So any trade you guys are taking right now is just a counter trend trade. All right, and when when you're going against the trend, it always difficult. All right, it always difficult. So hopefully you got the idea that the DXY can drop big to the downside. All right, so that's a bigger picture. All right, that's a bigger picture, and on lower time frame, all right, for this week. Okay, so we may push up to this place, as we can see that the 17th of June date is being tested. 17th of June low is being tested by the gold. All right, and that's what we were looking since last you know, week. All right, so we got a nice nice flag, very sharp drop, and then we broke out and heading towards that. So we may continue to keep pushing towards that. That's why we are still looking for pullbacks on the euro dollar and still looking to trade on those pullbacks for the downside. Okay, and the DXY can continue to keep pushing more higher. All right, and as I said, that if we see that the gold start gaining against the other currencies, all right, and gold goes up against the dollar, okay, we will start looking for, you know, dollar to go down after hitting that 17th. Okay, right now what you're watching, gold is going to hold that 17th of July lows or not. If so, bang, dollar is going to drop after the Fed. Okay, and we're gonna start trading into that direction. Start looking for dollar to go down. All right, and the Australian dollar, yeah, good trade. All right, so it was a good trade, and I was expecting it to drop from there, right? Slightly went up, okay, gave us a good trade over there again, good entries, all right. And since let's check the, all right, let's check the, yeah, so since 24th of July we are selling it, and every time and pullback was coming over there, we were hitting it to the downside, all right. And the nice moves came over there, all these pullbacks, yeah. So where I got the entries, let me tell you, the first entry is somewhere here within these areas, yes. I don't remember the exact price, yes, so somewhere here within these areas, okay. And next entry I got exactly at this place, exactly at this place, all right, when it was hitting the 3 minute, all right, I guess on this top or this top, all right, this top or this top, I'm not exactly sure which top, but I have shared that with you already when I took that trade, all right. So here, right, exactly at those areas, okay. And yeah, good move, okay. So it's still a good move, okay. And we can see that the 17th of June is here, all right. 17th of June is here, okay. And we still got a room to run, and there is a chance that we still can see more sell-off, but you know, it's not the best chart at the moment anymore, okay, because it has already fallen from that top, okay, and fallen from that top with almost more than 100 pip move, okay. A nice decent move has happened over there. So if we get a pullback, deeper pullback, all right, very much similar like that, like last night, all right, then we are still looking for this to continue to keep dragging lower, all right. But for this move, we need to keep eye where the gold goes, right? So we need to look at the gold move, okay. What gold is doing before we can trade into that direction. Yeah, but the big move has already happened over there from that top. It's a big move, all right. The 100 pip move, maybe not big for you, but it's a very big move, all right. Very big move when you know that it is going to happen. Even if you know that the 10 pip move is going to happen, it's a very big move for you, all right. So we still can see, you know, pullback very much similar like that, and still can keep having these flags to keep breaking to the downside all the way to that you know, 17 June low. Yeah, so still a good trade, a good chart to keep trading to the downside for short term. But make sure when you are selling this, all right, you are not selling at the lows, okay, and not holding those trades specifically even without stop loss, okay. I have shown you the bigger time frame, huge potential for continue to keep pushing more higher. So any amount of capital gonna be wiped out if you're not gonna use this stop loss. So stop loss is very important, it protects your account, so always use that, all right. So New Zealand dollar, similar picture, okay, similar picture. We still can see short-term continuation to the downside, very much similar like that, okay. So bigger time frame, Australian dollar chart I have already shown you, all right. And we can see that the lagging move still can happen over there for upside, okay. Why I'm saying that this is a lagging move, all right, because Australian dollar, the Australian dollar and the New Zealand dollar, they have fallen significantly against the pound and the euro, all right. And those pairs were pointing out that we're gonna have a crash over there on the equities, yeah. So tariff caused that, all right. We got a I mean a drop on equities, okay. So let's just look at that chart, and then I'm gonna quickly come back to this, okay, and why there is a risk for these risk currencies to run further for upside. And any trade you take to the downside is just for short term, all right. 1 hour or 3 minute time frame is going to be a counter trend trade, and you are not selling them at the lows, All right, so okay, so I'm gonna use that. All right, so we got all right, so I'm gonna use this that way and gonna pull out the indices. Again, Nasdaq 100 index, daily time frame. All right, and let's just remove that and remove that, and okay, so we got a crash on the indices. Okay, nicely led by, okay, we got a crash. Let me use that. All right, so Nasdaq 100 index dropped from that top to this low. Okay, and we got a drop from, we got a very sharp aggressive move over there. Okay, so euro was gaining. Euro already saw this was coming. All right, euro already saw this was coming. Okay, so it went up to this low, but I'm just trying to figure it, I'm trying to show you that why you know, the euro already saw that this move was coming, the crash was coming. Okay, I'm gonna look at the daily time frame so that you can see. All right, so the date euro started to fall was this, all right, and went up to this. All right, so even if we go to further lower time frame, we can see that, you know, much clearly that which pair which asset moved first. All right, so euro moved first, all right, on lower time frame. So if we're gonna do, you know, a date analysis, all right, we can see that the euro aggressively started to rise, and then we saw that the crash happened over there on the indices caused by the Trump tariffs. All right, and then what we saw that in the Nasdaq 100 index, you know, found floor over there. Hopefully you remember that when we were looking for buy here. Okay, and we saw, all right, so we saw a nice, you know, crash and then run. Okay, we saw a crash, we went up, but we are still going down. All right, back to this low. Okay, so euro can drop significantly. All right, that's the reason every time when we see that the euro is heading back to the daily euro dollar, all right, heading back to the daily top, like 118, 117, 1.1750, yeah, and we are looking short, all right, because euro is lagging, and the other reason why euro can fall, all right, back to the 114, 112, yeah, within those ranges, because ECB is not happy. There are two forces at the moment which is fighting. You know, not two, there are a couple of forces, we can say that. All right, so Trump wants weaker dollar, all right, so he can offset the tariff impact. All right, he wants weaker dollar so that he can, you know, fight with the tariff impact on the economy. On the other side, in the Europe, inflation is 2%, all right, and there is a risk for undershoot. Inflation can fall significantly below 2% in the Europe, and ECB is having interest rate at 2%, all right, and they are saying that there is a risk for undershoot, not overshoot. Okay, and on top of that, you know, after yesterday deal, yeah, Trump is putting 15% tariff on European goods. All right, means that more slowdown in the European economy can slow down, you know, even after having, you know, this 15% tariff. Simply, if you know, European goods price is going to go higher, there are going to be less buyers in the US. All right, and going to cause the slowdown in the Europe. So significant risk for undershoot. Inflation can significantly fall below 2% into the Europe. All right, and what ECB is saying, that if we see stronger euro, all right, that can impact on the US economy, on the Europe economy. All right, So stronger euro can even drag the inflation significantly lower, can kill the inflation, all right? So they don't want stronger euro, all right? They want weaker euro so that they can have inflation at 2% or above 2%, all right? So they are saying that they don't want, they are not, they're saying, we can say that, politely, not very, very, dowishly, all right? Politely, they are saying that euro is going higher, it's stronger, putting impact on the European economy. On the other hand, Trump want weaker dollar. So they are fighting, all right? Everyone wants weaker currency, all right? Weaker currency, 2% inflation or below 2% inflation, so that they can print more money and they can service their debt and grow up their economy. So that's the plan. That's the plan from everyone. So there is a significant risk that the euro can fall, all right? Because ECB, they don't want a stronger euro, all right? So stronger euro can impact on the European economy, all right? And the risk for the euro to fall, very much similar. This is a risk-on move, okay? The risk-on move which has already happened over there on the Nasdaq 100 index, all right? The euro can fall. It's gonna significantly push up the New Zealand dollar. So New Zealand dollar is basically, New Zealand dollar is a risk-on currency. It's lagging behind that, behind the risk-on assets, all right? So New Zealand dollar can significantly catch up the moves which we have already seen on the indices, all right? And the New Zealand dollar, US dollar can spike up, catch up the euro dollar lag we have over there. That's how this the divergence between these assets work. Okay, so if I'm gonna look at this chart now, all right, so there is a clear a risk for this move to happen. Now you can see there, see that, okay? So this move can happen over there, as we already have saw the indices making all-time highs. Okay, so keep that thing in mind. So when we're going to know that this is going to break up, all right? So first we're going to see the move over there on the pound New Zealand dollar and on the euro New Zealand dollar. They're going to move first, all right? And once they're going to move, bang, you're going to see the dollar going to go down significantly. Dollar is a lagging pair, all right? Dollar moves after those those assets. All right, like the example which I have just shown you here, all right? Okay, I'm going to show you again to understand that. All right, this chart. Okay, so this chart we can see clearly. So we can see that the pound is sitting over there at the bottom at 1. Let me talk about this behind the previous part first. Okay, we can see this is the blue line is the pound New Zealand dollar, all right? The white line is the pound Australian dollar, all right? The pound Australian dollar, they both went lower significantly. Bang, pound fallen, all right? People took out, they took out their money away from the UK, and then the pound fallen against the Australian dollar as well. And at that time, pound was sitting over there, all right? Pound was sitting over there at that time, all right? And then other pairs started to catch up. The pound fallen against the yen, pound fallen against the CAD, pound fallen against the euro, and pound was sitting over there at the top, and then pound started to fall. So this is telling us that the dollar is lagging, all right? Dollar was lagging. Dollar moved after, all right? So similar move is just happening over there right now, all right? Pound is gaining against the New Zealand dollar, CAD, Chief, Uzi, all right? Even yen, they went up. But the pound is sitting over there at that low. This is a clear sign that we may see weaknesses on the dollar after the Fed rate this year, all right? The pound is strong, the dollar is weaker, the dollar is strong. People are buying the dollar, expecting that Fed gonna hold the rates, all right? And not gonna cut the rates. But there might be something dovish Fed can say, like, I mean, they can play out dovish as you know that Donald Trump is putting a lot of pressure on the Fed and targeting the Powell. So something dovish can come out over there, which can drive the dollar lower. All right, we don't know yet. All right, but market is setting up for that already. Okay, so similarly, we're gonna, when that move gonna happen, we will see that already. The pound gonna fall against the Australian dollar, New Zealand dollar, euro gonna fall against the Australian dollar, New Zealand dollar significantly, and we're gonna see that the Australian dollar, US dollar gonna jump, Australian dollar, New Zealand dollar gonna jump significantly for upside. All right, so that move can happen. So that's a very, very, you know, longer term perspective. All right, so may not happen just now, so you don't need to rush. Okay, so gold. Short term, yeah, still bearish on the lower time frame. Yeah, so this is still bearish. So we are looking still a decent pullback. All right, and 17th of June low, Fed still to come. Okay, so we may see, you know, drop to these lows and all the way to these lows. We still can grab, you know, short term continuation 3-minute trades, but make sure you use stop loss. Don't trade without stop loss. That can be dangerous, as I have just shown you the bigger picture. All right, and the dollar CAD, similar. So dollar CAD went up nicely. All right, let me bring that chart. All right, so we did not buy the dollar CAD. All right, so we were using dollar CAD as a lead. So one thing, guys, just keep in your mind. All right, one thing just keep in your mind, to just for your confirmation. All right, okay, next time when you see it's a, okay, when next time when you see this chart, okay, I mean that the gold is moving significantly, all right, or silver moving, these three commodities moving significantly sharply like the gold has done over there. Okay, so the next pair among currencies you should expect to move is the dollar CAD. All right, dollar CAD is highly, you know, correlated to the commodities, moves very often towards, I mean, follow very often to the commodities. Okay, and when dollar CAD is following the commodities, okay, the next pairs you are expecting to move is this. All right, so they're going to be the upper. This is what I said to you. All right, that's what we were targeting. That's what I was targeting. Australian dollar short. All right, Australian dollar short. I was saying to you guys, short. All right, okay, because we got a nice lead over there among currencies. I mean, commodities were leading, but we got a nice lead over there on the currencies as well. Okay, and then bang, you know, pound followed up, right, and then we started to catch up the one which were lagging. Okay, so hopefully you got this sequence. All right, the sequence is that you are, if commodities move, all right, commodities move, okay, your eyes should be there. All right, how dollar CAD is doing. Dollar CAD is very quick to follow them up. All right, commodities. All right, and then you see the others, they follow up. Okay, these three pairs are highly correlated. These three pairs, okay, they follow each other. They follow each other. All right, and these two pairs are highly correlated, and obviously gold and silver are highly correlated. Okay, and copper as well. Copper sometimes move randomly, okay, but still a good lead to trade on the gold. Okay, so all right, so good trade. Okay, so gold is still falling. This is not a buy yet. All right, gold is still falling. You can see that the gold is still falling. Okay, as long as gold is falling, we are shorting the euro dollar every pullback. So dollar CAD did well. Okay, but we did not buy that. We used that as a lead to trade on the Australian dollar, New Zealand dollar, and euro dollar. All right, and okay, so again it can play a leading role again, you know, after the Fed. All right, now this is the move which is happening on the euro. Okay, this chart here that. All right, so I mean euro, so I'm searching the dollar CAD chart, so let me bring that chart too. But all right, now we can see that the euro is following the gold. So I'm finding the dollar CAD chart. So dollar CAD nicely went up, and the yield was also leading here. Okay, so when I saw that, guys, we are having jump on the yield went up, was clearly a sign that to stop buying the dollar. Okay, first we saw that gold went lower. Okay, after gold we saw that the yield went up after dropping that move. Okay, and then the rest of the market started to catch up. Yeah, so I'm trying to search the dollar CAD. There you go, I got it. So dollar CAD. Okay, so we had that move as well, right, on the other day when we saw that the gold jumped. If you were, you know, watching the live sessions, all right, so we got that move as well. If you remember, we got a buy opportunities on the euro dollar as well when we had that move, if you remember that on the live session. All right, so euro, we were buying the euro at that time. All right, so we were buying the euro at that time. So euro buy was there. All right, this chart on the euro. Okay, so we got a nice buy opportunity on the euro when we were selling the dollar. All right, so we got a drop here, and then we got this move went up to 1780 somewhere 1770 somewhere there. I don't know the exact top, right, but we got a nice move over there. All right, so this move was also led by the gold, if you remember the live session. All right, so gold also so lead us that this move was going to come. All right, and then obviously the drop happened, and then okay, so it's heading towards that 17th July top over there. Okay, completing the move where the gold is sitting right now. Gold is still pushing lower. I wanted to see gold much lower, go all the way up to 3100, so that you can get good opportunities to buy gold again at the lows, back to 35, 36, maybe in longer term 4000. all right, but if we see that the gold is finding floor over there at 17th of July, all right, and going up, all right, then we're going to see that these currencies, they're going to start falling again after testing the 17th of July, specifically after the Fed rate decision. Okay, and if I'm going to go to the updated chart, all right, so the move is very much completed over there, very much completed. All right, and 17th of July here, all right, at the close to these tops. Okay, and then we may see again drop. So basically we may see this next move lower. Okay, we don't have that trade yet. All right, so once we're gonna get a lead over there from gold or other assets, all right, then this is gonna happen very likely after the Fed rate decision. All right, highly likely gonna happen after the Fed rate decision, not now. So basically you are simply paying attention the dollar CAD. Once dollar CAD, don't just start jumping into the market so early. All right, there is a risk for a breakup. Right, we don't know that price going to reverse from that top or not. All right, once we're gonna get a lead, obviously then we're gonna start looking for it to sell. All right, slightly can go beyond that. We don't have a lead. Okay, but this is just a guess at the moment. All right, I'm just guessing that. I have any confirmation that we're gonna get that move. I'm just anticipating that after the Fed rate decision we may see that move. All right, the confirmation gonna be commodities. If commodities lead us, obviously we're gonna look for that move. We're gonna start trading into that move. All right, so dollar CAD, euro dollar, we are still looking it to go down. Okay, selling 3-minute pullbacks. As said, pound is not a tradable at the moment. Okay, pound as said that pound's supposed to be a good asset to trade. All right, so why paused on pound at the moment? Because pound right now is leading. Usually what we see on the pound goes after the euro. Okay, but right now that's not happening. Euro, we can see that the correlation is on pause, or you know, we can say that the pound is leading at the moment. All right, but that's not the case. All right, it looks like after looking at the chart, but it's not happening at the moment. All right, what's happening right now is that the euro is playing as a safe haven. Euro is still up, all right, while the other risk on currencies, they are still down, like Australian dollar, New Zealand dollar, they are still down on daily time frame. All right, and euro is still up. Okay, and if we're going to look at the euro pound, okay, so euro pound is heading towards that all right, this low is euro pound is heading towards this low. All right, a high, we can say that 2023 high, you can see over there, yeah, the 2023 high is heading towards that. Okay, so when we see that the euro goes that much high against the pound, is typically a sign that the pound can crash. All right, is a sign that the pound can crash to the downside. So it happens usually then when the UK economy is not doing really well, then pound moves ahead of the euro. Start playing as a safe haven. Pound moves ahead of the euro, and then once a pound makes its move, all right, then euro start following the pound. All right, hopefully you understand that. If not, then it's going to be difficult. All right, but let's try to tell you what I'm saying. All right, so I'm going to go and look at the pound pair. Okay, the pound and then pound chief. Okay, you can understand that on looking at the pound and then pound chief. So we can see clearly here that the pound has significantly fallen against the chief, or chief is very, very strong currency at the moment. All right, so we are heading towards this low. Okay, this low. All right, pound is significantly weaker. All right, heading towards that low, is heading down. This is the weekly chart, heading towards this low. Okay, so July lows 2023. Yeah, so pound is significantly weaker against the chief, but pound is significantly strong against the dollar. Both are safe haven currencies. Okay, so the dollar is safe haven, the chief is safe haven, but one safe haven currency is stronger than the other. And the reason, there is no inflation in the Switzerland, okay, and rates are falling significantly. I mean, close to zero, right? Close to zero, or already zero. I haven't seen rates yet. Okay, but yes, there is a chance that the inflation can go to negative. Even rates can go to negative in the Switzerland, which is causing the Switzerland to play as a safe haven. All right, that's the reason the chief is very, very strong than any other currency. Okay, causing pound to keep falling. All right, and on the other side, UK economy is not doing really well, facing a stagflation. All right. And we have seen in the last 2 months the GDP numbers were negative. All right, and rates are higher. Okay, inflation is higher, GDP negative. All right, most likely, I haven't seen this month numbers. Maybe this month numbers are negative or positive. If going to be negative, then 1 quarter is negative. All right, so negative GDP. All right, falling GDP. All right, higher inflation somewhere close to 3%. I haven't seen the exact numbers, but maybe somewhere there, close to 3% or above 3%, and rates are higher too. All right, so how currency can continue to keep rising? All right, so there is a headwind on the pound from the UK economy. Their economy is slowing down, rates are higher, facing stagflation. All right, and currency is rising. All right, so pound is rising just because of the dollar is falling. All right, dollar is falling. That's the reason pound is rising over there. So there is a proper risk that the pound can crash, very much similar like it has already crashed against the chief. All right, So this scenario is not aligned with the bigger scenario which I have just explained to you by earlier showing the Australian dollar chart with the silver chart. All right, okay, those charts were were telling us a different story. All right, but that doesn't mean the pound cannot rise after falling for longer term. All right, so it can quickly reverse like it has done over there, but there is a risk building over there that the pound significantly can crash to the downside. All right, so that's why every time when we see that the pound is heading towards that high, we are more interested to sell it rather than buy. Okay, we were buying at this area, if you remember that, at 120. Before we were selling it from this 130, 34, 35 areas. Yeah, very decent move appeared over there, very nice. You might be dreaming that move again. All right, if you have traded on that move long time ago, but that was very, very nice move when euro was just keep falling and we were just hitting the pound every time, and we were seeing pullback on the pound. We were hitting the pound head at that time. Yeah, so very nice move happened. Then we saw a buy, which I still do have those charts, if you remember that, when the euro was leading nicely, rising very, very aggressively, and we were buying the pound back to that top. So both moves were very nice. Okay, so similarly I want to see this kind of move again. All right, but led by the euro needs to move first. Okay, if euro goes down first, all right, and the pound fall behind, then okay, now there is a very good chance that the euro can fall first rather than the pound first. All right, okay, why no, let's get back to the previous chart, the first chart which I have just shown. It's a puzzle trading is like a puzzle. You need to understand this puzzle to figure it out, that where you're supposed to be. All right, one chart tells you the story to the other chart. All right, so okay, when we're gonna have pound gonna euro gonna rise to that much high, okay, it is going to give us a very clear divergence over there between the pound and the euro. They're going to be talking to the UK and Europe that the pound is falling against the euro and blah 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 blah. They're going to be pressured to do something. All right, then we're going to see yeah, lots of talks going to be over there, like we've seen previously. Okay, every time when we saw, let me look at these old charts. Okay, all right, every time when you saw that, and bang, it went lower. All right, and bang, went lower. So then euro gonna lead. Okay, went lower. All these I mean, every time when we saw that the euro went lower to that, I mean, went into these ranges, okay, it dropped significantly, 92 or 95 within these areas, then dropped. So if euro keeps pushing higher and pound dollar keeps going down, all right, significant divergence going to be over there. It means that the euro dollar will remain a sell opportunities every time, and you get a chance to keep to trade. Okay, so this move, okay, this move gonna be ahead of the pound dollar. The euro gonna fall first. Euro gonna fall first, and then pound gonna catch up. It's a long story, guys. I mean, it's a very, I mean, we are not there yet. Okay, but this is the sequence I'm telling you. The sequence the ideal sequence which I'm anticipating. Euro to go down first, all right, euro pound to start falling first, all right, pound to stay up close to the daily top, and then we start hitting the pound to the downside. All right, okay, so I'm gonna ignore this. All right, so I'm gonna look at the yield. Okay, so yield right now is holding 450. Let's talk about the yield. The yield is very important. All right, yield is very important. Okay, so yield, what's happening right now, guys? Tariffs. Okay, so tariffs. So far Trump has generated almost 300 billion income from the tariffs, right, in the last 6 months. last 5-6 months they have generated 300 billion income. Yeah, so their annual target is somewhere close to these numbers, are 600 billion. Yeah, 600 billion, that's where they're eyeing. So to get that much money from the tariffs. Okay, so what the tariffs can do, the risk which Fed is facing, they are facing that the inflation gonna jump. All right, this is just based on expectations. All right, there is no concrete evidence yet that the inflation gonna rise in the US. Okay, so when you put these tariffs on goods coming into the US, all right, and people are paying higher prices, it will take time to those higher prices to go into the system. All right, it will take some time to those higher prices to appear into the inflation. Okay, it may take some time, like six months. All right, maybe 6 months or maybe a year, we don't know. That's the reason Fed is just waiting for these tariffs to appear into the inflation. They haven't appeared yet. Okay, what Fed was doing 6 months ago, they were cutting rates every time when they were having meeting, 25 basis point cutting every other meeting. Yeah, but suddenly when Trump came into the office, yeah, he brought higher tariffs, Fed stopped cutting the interest rate. Okay, so if I'm gonna pull out the inflation, all right, so US IRYY, all right, this is where the inflation is going. Okay, and I'm gonna pull out the money supply, US M2. All right, so money supply started to rise. Okay, let's just talk about this quickly, and then we're going to talk about the future. Okay, what happened here? Money supply significantly went up after the COVID-19. Then we saw that the inflation went up, these red lines, that red line. Okay, then we saw that the yield jump aggressively for upside, went after, and then we saw that the Fed started to raise the interest rate. Let's put that as well. Okay, I'm just reminding you this chart after a long time. Let's put that too. So USINTR. All right, and then this is the interest rate. Okay, so Fed held the interest rate, inflation went up, they started to raise the interest rate. Okay, so what Fed was doing, all right, so money supply went down, inflation went down, all right, and Fed started to cut the interest rate. Yeah, they were cutting. Okay, slowly they were cutting every time. Now they are holding. All right, they are holding interest rate at 450, and they are saying that they are not cutting. They're waiting for these tariffs to appear into the system. All right, and what happened here? Okay, money supply started to went higher again. This is the risk which is just they are looking at the moment. All right, or inflation expectations slightly still anchored, all right, so slightly went higher. So inflation is still falling. Okay, inflation numbers are lagging, all right, they are lagging behind this money supply. So inflation is still falling, all right, 2% target is here. Okay, above the 2% target, holding at 2.7. all right, now we can see there the yield is sitting at 450. All right, 450. So where are this yield supposed to go? This yield supposed to go up, or this yield supposed to go down? What do you say? Just tell me in the chat. Just type it over there, guys. Where this yield supposed to go? It's lagging, I can see there. Yeah, down. Yeah, that's what. Yes, yeah. All right, so that's what happened here in the past. All right, that's what has happened over there in the past, and it's telling you what's supposed to happen in the future. All right, money supply up, yield is up, inflation is up, and inflation yield is catching up. All right, and then Fed is catching up. Okay, and it's supposed to follow the, I mean it's following the same step here. Okay, so yield gonna go there where the inflation is. All right, so simple. Yield, this 10-year yield will go there where this inflation is. Okay, inflation is at 2.7. okay, and what is the Fed inflation target? Okay, Fed is already telling us that our inflation target is 2%. We're not gonna cut the rate until inflation hit the 2% target. All right. Okay, so this is the risk, where the risk. Okay, Fed, Trump also passed a beautiful tax bill, yeah, which is close to 3 trillion or 4 trillion, don't know the exact number, but they have passed that bill. Okay, and that bill is gonna reflect over there. What is the purpose of that bill? To print more money, simply. All right, so they don't have money. All right. Okay, so American governments, they don't have money to run the operations, guys. They have to borrow. Okay, they have to borrow. Every time a new government gonna come in, they have to borrow to run the operations, to pay the debts, to service their debts. Okay, when Trump came into the office, all right, I was telling to my my members that they're gonna, they have to borrow. All right, they have to borrow money to. Yeah, so they have passed a bill, all right, and what they're gonna do, they're gonna issue more bonds and gonna create more money. Simple. Borrow more, yeah, issue more bonds. So when they're gonna issue more bonds, who's gonna buy those bonds? All right, so in the world we don't have that much money. All right, so we're gonna buy 1 or 2 or 3 trillion dollar bonds issued by the US treasuries. All right, obviously Fed gonna come and gonna buy those bonds. Fed is funding American government. All right, Fed is funding right now the American government. They are paying for the American government. All right, so let's get back to this point. All right, so this yield, all right, so this yield, okay, this yield is not going to jump. All right, this yield is not going to jump into that direction. The yield is only going to jump into that direction, all right, if we see that inflation is rising. Okay, there is a risk for the second spike in the inflation, okay, caused by the tariffs. All right, tariffs. All right, there is a risk for the second spike caused by the tariffs. That's the reason Fed is not cutting the interest rate, and why Trump is putting pressure on the Fed, because Trump doesn't want to look bad if economy goes down, if economy fall from here. Fed already Trump is already found a scapegoat, and the scapegoat is the Powell. He's gonna blame the Powell. He's gonna say that the economy has fallen just because of the Powell. He didn't cut the interest rate. All right, but he's not talking about the tariffs. All right, tariff can cause the inflation. Okay, that's the reason they are holding. So what we know that the yield is not going to rise. Okay, yield gonna fall. If inflation gonna stay here, maybe small push back to 3%, then again inflation can fall to close to 2%. All right, and this yield gonna go down. Okay, and this, if we get that much drop on the yield, okay, you're gonna have again a drop on the dollar as well. So if I'm gonna pull out the dollar, okay, so another case for dollar drop. Right, so another case we are having for dollar drop. All right, so dollar is already dropping over there. This is the green. Again, you can see that the green line is the dollar. All right, dollar is already pricing in for rate cuts. Okay, we can see that the dollar is going into that direction where the inflation is. dollar market is already expecting that the yield gonna fall aggressively to the downside. I mean, yeah, selling dollar. People are selling dollar, that they know that the Fed gonna cut the interest rate and the yield gonna fall. They're selling the dollar. Yeah, already selling. So the first case which I made that the dollar can fall for a longer term is perfectly aligned with this. All right. So what can happen? All right. Inflation can fall significantly. Actually, the tariffs are slowing down the economy, all right? The global economy, not the US economy at the moment, but the global economy is slowing down significantly. Later on, which can appear into the US economy as well, all right? And I'm not into this direction of the inflation, okay? I'm more into this direction where inflation gonna fall, where the rest of the world inflation is going, where the rest of the world is going. US also gonna go into that direction. All right, and the yield gonna fall to the downside, and dollar is already falling. And further, sharp interest rate cut by the Fed can drive the dollar significantly lower. This is a longer term picture, which is, gonna play out over there in longer term. So keep that picture into your mind, and now let's get back to this chart. All right, okay, I'm gonna pull out that dollar with it. All right, so okay, so some of my analysis are not aligning with the others. Okay, on some pairs I'm saying that I want to see the pound to fall, I want to see euro to fall. On some charts I'm saying that I want to see dollar to fall. All right, these are currencies, that's how they move. Okay, so one currency gonna gain and the other one gonna rise. All right, and these moves can be caused by the monetary policy and fiscal policy. These are not commodities or indices, okay, which only goes into one, like Bitcoin, yeah, which goes only into one direction, rising and just bullish. All right, so sorry, so let's get back to the pound. All right, so on the bigger time frame, I have told you what we are anticipating on the yield. Okay, so yield can cap over there for a while, this 10-year yield. All right, within these areas. So recently capped over there, was not going higher. All right, and falling from every time when it goes there close to 4.60. all right, and dollar pulls back, we are seeing the dollar drop. All right, there. All right, at this area, yeah, we were expecting dollar drop here as well, so nice drop came over there. Okay, so yield is telling us that dollar cannot rise big at the moment. All right, dollar has to stay bearish and trending to the downside. So every time when yield come closer to within these areas, 480 is big numbers. All right, 480 big numbers, 460, yeah, and we start looking for yield to go down and dollar to go down too. Yeah, a nice drop happened over there. So nice drop happened. So next top might be finding within the dollar, finding within these areas. Okay, in these areas, I said that the 17th of June top. Okay, and yield to stay within these areas and get down. Okay, and the US Treasury is gonna be a buy setup, gonna be over there in US Treasuries. Okay, so that's why yield is important. So had that chart. If you guys, this is a Terra Classic. Okay, remember once it was at 100. All right, but now these days it is almost dead. Okay, but still giving you a good opportunities. All right, so recently we were expecting it to hold that. Giving you one-to-one trade, guys, one-to-one trade every time, and it's coming close to 1 cent, right? It's giving a nice buy opportunity. Below 1 cent, it's not at 1 cent, even below 1 cent, right? Buy opportunity, but takes time to rise. Okay, and easily can give you, if it comes down to this low, again gonna be a buy opportunity. All right, so the recent buy happened here, right, when you know, stable coins bill passed, right? So nice move happened here on this. Yeah, it's a nice move. So yeah, so nice move happened here on I mean 72%. All right, it made a low here at the start of the year in February, 100% since then. Okay, but if it comes to that low, still gonna be a, you know, safe investment, I can say that. All right, and if I'm gonna look at the Bitcoin, okay, so Bitcoin is just keep rising. All right, you can't do much on this. All right, if you only trading for short term, you can trade on it. All right, it's just keep rising, and there is a very good chance that you know, it can go easily up to 150 at, you know, the current trend can continue to keep climbing up to 150. All right, 150k, and yeah, so nice move came over there from last time when it was falling up to 80, 75 within these areas. I was saying, guys, look for it to continue to keep rising. All right, but the higher it goes, creates more chances to fall aggressively. All right, the higher it goes, creates more chance to fall aggressively, significantly to the downside. All right, so yeah, target is 150k. All right, 150k, and in further longer term, targets much higher. All right, and the problem to trade on this right now is that you don't have a lead at the moment. All right, okay, so what I'm saying, let's talk about that first. Okay, so that was a perfect buy opportunity at that time when we saw Trump tariffs. All right, so we had buy opportunities here. Okay, let's talk about that. So all right, so we were expecting buy opportunities on the Bitcoin. Okay, nice. We just saw that chart. Right, nice buy opportunity came here. Okay, when we saw that the Trump came into the office and tariff, saying that Trump all the time, tariff. So that tariff caused that move. Then we saw a decent move for the upside. Okay, so this chart, pound dollar, Bitcoin. Okay, and the next chart was the indices. Okay, indices. The next chart, indices. Okay, we saw that bang, nice move, same risk on move we are having on the US30. Okay, nice, from those lows, bang, and heading higher. Right, these lows, this is, I mean, I'm just telling you how to trade on the Bitcoin if you're trading. All right, so same move here, and US30, then Nasdaq and index. Okay, same bang, then S&P 500. Okay, so same move happened here. All right, we are in a strong risk on environment, specifically after the bill passed by the Senate and House, the Trump beautiful tax bill. Okay, equities are in a strong trending market for upside. All right, and there is a risk for a correction. We don't know when that's going to happen, but there is a risk. Okay, all these four assets are in a strong risk on environment. All right, so I'm gonna look at this. Canvas 16. The Bitcoin is highly correlated to the indices. All right, canvas 16. All right, so as I've just shown you, all these charts, they made a nice bottom over there. Bitcoin made a nice bottom, bang, pushing higher. All right, so let's bring it to BTC there, and Nasdaq index there, US30 there, right, and S&P 500 over there. All right, so make it right. All right, and 2 days, we had this on 2 days. Okay, we had that on 2 days as well. 2 days. Okay, so you see that same move. All right, so I had it on 1 day, the buy setup, which I actually wanted to show. Okay, bottom here. All right, bottom there. All right, bottom here. All right, and bottom here. So same move we are having over there. All right, so same bullish aggressive move, same bullish aggressive move, same bullish aggressive move. Okay, so same bullish aggressive move. All right, so click. We just saw these charts. All right, so bang. All right, and indices gone up. All right, so what these charts are telling you, these 4 charts are telling you that they are highly correlated. All right, gone up, highly correlated. So what to do now? All right, so you're trading on them, just simply watching your lower time frame. All right, whatever time frame you are trading. All right, so just watch. If one risk asset goes up, the other will move up too. All right, so if you see that the Nasdaq, let's say Nasdaq 100 index is, they are correcting, by the way, right now. All right, and let's look at this. All right, so very much similar move. All right, so news came last night here. Okay, so I mean the same formation, same pattern is just happening here. Okay, so news came last night because BTC is being traded over the weekend. It's showing here. All right, so show at this area. All right, so it bounced off already over the weekend. All right, went higher, and your equities, news came, equities also just simply. All right, so there. All right, so clearly telling you that where the risk on assets gonna go. Bitcoin was telling you that where the risk on assets was going. All right, okay, there is the, okay, this chart I just opened right now in front of you. All right, I haven't seen this, you know, before the outlook. All right, I have just opened this chart in front of you, just showing you that you can use that this way. You can get the idea that what is the next move on the other chart. Okay, Bitcoin already went up over the weekend from 115k to 120. All right, and when market open, equities just went up from 23, 22. This move happened over there on this 50-minute time frame. Okay, you can check the pips. This move happened over there, so there was a clear lead. Okay, if we see that this, I mean, they fall sharply, right? We're gonna see the Bitcoin has established a strong correlation with the indices as well, right? Where indices goes, Bitcoin goes there, all right? Or where Bitcoin goes over the weekend, you're gonna see that the indices is gonna go there too. Yeah, hopefully you understand that. All right, so here, okay, at this place, market open, at this area when gap up. Okay, their market open, and Bitcoin was being traded from here to here. Okay, this was the lead. Right, this part, this was the weekend. All right, and bang, it opened with a huge gap up. Yeah, so hopefully you got something, you learned something. So that's how you can do on lower time frame here. Okay, we are, the equities are dropping. Okay, if US and during the US open, we may see a drop, as we can see that the dollar is gaining. Okay, so it can go down. Okay, that's what you need to do. So we are still in a correction. Okay, this correction can break up. All right, this correction, which is just appearing over there, can break up and can continue for more upside. That's your Bitcoin chart. Ethereum is catching up. Ethereum went lower significantly, okay, and then catching up. Yeah, may not break up. We are expecting it to go up to 8K in longer run. All right, but yeah, if I mean, every time when you see that it's coming down, testing the floors, it's gonna be a definitely buy opportunities for longer term. All right, so like that, 8K is the target for longer term. Yeah, like that. I mean, no, there is no trade. We may see a drop from there. I don't see a trade over there. Indices, I don't see trade over there. They're already pushing higher. All right, and pullback can happen up to these lows. Okay, we are already projecting that drop can happen. All right, and Nasdaq also can drop to these, the 17th of July lows simply. Okay, 17th of July come here. 17th of July come here. So we may see, you know, equities can go down. So we are not countering them, not selling them. So we'll see if there is a buy opportunity. Buy opportunities were there. If you have, you know, seen my chart, then obviously there was buy opportunities. Yeah, daily time frame. Okay, this buy opportunity, when this daily correction was forming, buy opportunity was there. The next one was there. All right, and this is a bit old. So yeah, indices are very, very strong right now. All right, so same goes here. When the daily correction was forming over there on the Nasdaq 100 index, it was break. Since then they are rising. Nice buy the dip opportunity was there on all three. Okay, so same correction was here. This daily correction, S&P 500 was setting up for a breakout, next breakout. Since then I didn't update, but yeah, they gone up. Okay, now we are expecting a pullback on indices. Okay, and pullback can happen. Maybe we're not gonna get that anytime soon. No reason yet. All right, as things are getting better now, Trump getting more deals. All right, so simply where this is going, let's just check the trade which I just shared. 3-minute time frame trade, nicely dropped. Okay, the 3-minute trade is already happening here, which I was talking about. All right, so euro is still keep dragging lower, nicely falling. All right, and Australian dollar is also catching up that. So the trade which I was talking about, my canvas is small, is big, so that's why the chart is not much clear. So Australian dollar is also coming down, so that trade. All right, so the euro is just keep falling aggressively. Yeah, so that trade I can see on my other screens is happening right now. So I'm gonna ignore that. So guys, we've seen that the dollar charts, what we can expect. All right, so still buying dollar till Fed day. All right, so gold. Okay, gold gonna be a buy. Yeah, gold, I personally wanted to see it to go all the way to this low. All right, but maybe we're not gonna get that much low. gold. Let's remove that. All right, so I wanted to see gold to go that much lower. All right, this low. So I'm not sure either we're gonna get that or not. Yeah, there is a risk for the recession. I'm not sure if you have heard about the recession package or not. Yeah, so the budget department is talking about the recession package. All right, they just passed a package. All right, a big huge package, and after having that package, they're talking about another package. All right, they're saying that they are open to have a recession package, means that they are giving a signal for another package. All right. I told you that they are stuck into a cycle where they have to borrow more money to service their debts. All right, and economy is not growing. Economy is growing slowly. All right, and their buying spree is not stopping. They're just keep buying. Americans, you know, American government is just keep buying, so they're stuck into the debt cycle. All right, so gold, I want to see gold to go all the way up to 130.50. Yeah, so that you can have a nice, you know, something like that. Okay, we may not get that move. All right, I'm just wishing we can say that, guys. I wanted to wish, I'm wishing that gold to drop that much low so that we can you know, look for this to continue to keep rising. All right, so something like this for bigger time frame, like that. Okay, something like this formation. Okay, we may not get that move. All right, but what I want to see, okay, I want to see this to give us another leg. All right, like this. Let's remove that and let's find this support here, like this. Okay, and have like that. Okay, and go up to 45, yeah, 4500, like this. Okay, we may not get that leg. Okay, it is already into a triangle. Okay, which can break up. Gold is already into a triangle. Okay, we'll draw on that triangle. So all right, like this. I want to see like this. Let's find the moving averages. Okay, so we are in a strong trending market. All right, so MACD is suggesting, you know, another leg lower. Okay, like this leg. All right, like this leg here. MACD is suggesting another leg lower for fall up to within these moving averages. Okay, I wanted to see that this one more leg lower so that we can have a nice buying over there for longer term for upside, which can push the gold up to 4500. All right, we may not get that, guys. All right, we may not get that move. That's not 100% confirmation. All right, yeah, so we are in a correction. We can see clearly price is stuck into this correction since April. All right, okay, so now think about the yield. Okay, the chart which I have just shown you. Now bring that chart into your mind. The yield chart, this US money, yeah, US M2 chart, then the US interest rate chart, then the yield, 10-year yield chart. All right, and on top of that, the pound, the dollar chart and the inflation chart. All right, so what that chart was telling us, that the yield has to go down. All right, in longer term, Fed has to cut the interest rate. All right, when Fed has to cut interest rate, okay, dollar can drop. All right, okay, when dollar can drop, you're looking gold to continue its trend. Yeah, so it makes perfect sense for you to just keep buying the gold dips. Even gold is at all-time high, but still can run. It still can run. Okay, think about what the US government is doing right now. All right, they have passed $3 trillion bill, right? And they are saying they want another recession package to be passed. Means more money, all right? More money, more dollar printing, all right? So more dollar printing, they're stuck into this cycle. You shouldn't expect gold to fall. You simply should expect gold to continue its trend. Gold to just fight with this, trap, the trap they are having right now. All right, gold to just rising. Okay, so the dip is going to give you a nice at these within these ranges. All right, maybe we're not gonna get that, guys, and because the ranges are really tight, the ranges are very tight, and they can, let's just change that slightly. Okay, ranges, the correction is getting very tight like this. Okay, we are already into a triangle. Okay, and this triangle can break up. Okay, you see, you can see now that the ranges are already tight here, and breakup can, anything can drive any bad news. Okay, like you can see that so many new, not so many, I mean many new fronts, war fronts are opening. All right, we saw the Ukraine. All right, after that Ukraine, we saw the Middle East. All right, Middle East, I mean fighting, the recent new fight we saw between India and Pakistan. All right, and then we saw the Israel and Iran. All right, and then just recently we saw the Thailand and Cambodia. All right, any new front, all right, between big countries, like let's today news broke out, the UK and Australia, they said that if China invade into Taiwan, they're gonna fight together to protect the Taiwan. So any new front can open, all right? Any new front can, maybe Philippines, all right? They're arming, the Western countries are arming Philippines, all right? Any new front, a new front, maybe North Korea, South Korea. So all these are perfect scenario for gold to just keep rising. All right, all these are perfect scenarios for gold to just keep rising. So it is already in very tight ranges. It can break up very, very aggressively and can continue to keep rising towards maybe 5,000 in longer run. All right, we are targeting 4,500. All right, and it can even go much higher than that 4,500 in longer run. Okay, so this is a I mean gold is in a very tight ranges. Okay, the triangle, we can see that the triangle. Okay, so stuck into that triangle since May. All right, this is the tariff. Okay, tariff came and sharp rise on the gold. Okay, and then went into this triangle. Again, triangle is just making higher high there, higher high. Okay, higher high. Okay, maybe this is a higher high, all right, and then break out to test that 3,500 or 4,500. Right, this is a bigger picture. Okay, now let's talk about the lower time frame. Okay, every time when you're having lower low, you're paying attention. All right, talk about the lower time frame. All right, even let me find this 4-hour moving averages. Right, not very much clear. Okay, let's slightly go to the bigger. Not clear. So these moving averages are not very much clear. So where you can pay attention. So what you can do, okay, if you are still not clear how to do it, just mark these lows. Okay, these lows. We can see that the triangle is making higher high. Okay, these lows. So this next low you are paying. Sharp crash can happen. Just be prepared for that sharp crash. So that's why use stop loss. You're buying gold at top. Okay, use stop loss. Don't buy gold without stop loss. So stop must be over there. You're buying at the higher price. Stop loss must be over there. Okay, the lower the gold goes, obviously going to give you better opportunity, best price to buy it again. All right, so use stop loss. Let the price go more down, more lower. Okay, buy again. All right, the lower the gold goes, obviously going to give you best opportunity, better opportunity. So use stop loss. All right, so 17th of July here. Okay, 17th of July. I'm expecting it to rise from there after the Fed rate this year. I'm anticipating it to hold. Okay, reason I have shown you the first chart, gold chart. All right, the risk on currencies have fallen against the. I mean, risk on currencies are falling against the gold. I'm anticipating risk currencies to fall against the dollar. Okay, risk on currencies are falling against the dollar, all right, and I'm anticipating risk currencies to fall against the gold. Okay, when they're going to fall against the gold, they're going to gold also going to fall rise against the dollar, all right. And when gold going to rise against the dollar, we're going to see that dollar drop, right? I mean, lead going to be over there on gold crosses. All right, and after hopefully we're gonna hold that 17th of June. Not right now, right now it's not. You can see that the gold is still going lower. All right, okay, but go to this area and hold that, find that higher high, okay, and go back up. This will give us that move. All right, so you're still falling. It's a good sign. It's a very, very good sign for us to just stay short on the euro dollar. All right, the lower it goes is a good sign for us to just keep selling the euro dollar, pull back. All right, so it's dropped for another leg lower. Okay, so you marking these lows, these support areas, and looking for it to hold. If it breaks down, all right, then the next support. Okay, but you are looking for it to hold and buy opportunity. All right, it's a buy. Every time when it comes to a support, you're expecting it to hold that support and go back up. Okay, we will start looking for buy and gold during the Fed rate this year or after the Fed rate this year. Okay, we are not bullish. We are not into the trade yet. Okay, we are not into the buy. So if you are looking to buy the gold, no. All right, big no. Let me find the old chart where we had the opportunity to buy the gold. Somewhere there within these areas when it was breaking up the 4-hour time frame. Yeah, somewhere there within these areas. 16th of July. All right, so 16th of July, when Trump said that he gonna fire Donald Trump, Powell, that caused the dollar to go lower and gold to rise. And soon after, Trump realized that he cannot fire Powell. Powell is the real boss because Fed fund the U.S. government. Fed fund the U.S. government. They buy their bonds. All right, so I find that. There you go. Okay, so we saw that breakout. Nice breakout happened over there. Gold went back to that top. All right, and yeah, made that move and then bang, dropped. Okay, so every time when we see some kind of flag like this, okay, if gold goes into this flag, all right, so you are looking for buys on the lows, okay, like this, and looking for this next leg. So that's what has happened over there. Okay, the current leg is really sharp, okay, coming towards that 17th July lows. All right, and we're expecting it to hold this and again go back up. All right, this sharp leg, the current sharp leg happened over there. All right, this, okay, flag and another flag. All right, and then sharp leg again. This sharp leg is still happening. Find this low or maybe slightly lower than that, okay, and then hold and go back up to that top. That's a 4-hour time frame. Okay, the lower gold goes make me happy. It makes me happy because the euro goes down. There you go. We got that. I basically missed that trade. If I wasn't here, I wasn't having that you know, outlook, then I could have sold for this trade. You know, all my focus is on the telling you guys that what to do. Yeah, so I'm missing opportunities. All right, hopefully some of you guys have caught that move. All right, I share that chart or liar. Okay, so it's happening. So still okay, we still chasing that. We still, if we get a decent pullback on the euro have dropped significantly. All right, and if we get a pullback on the euro, we're still chasing that. Let me go to jump today. All right, so there you go. Okay, so we are catching up. This move going down. They are so if I go back to that, we're still chasing. If we get a good pullback on the, yeah, so I'll share that chart later on into the group, guys. All right, the target on the euro, okay, euro can fall up to this low, 17th. Yeah, 17th, I'm saying 17th of June. Yeah, there is your 17th of June. All right, first target is this. Gold has already crossed that. Okay, gold has already crossed that. Gold has already crossed that. So 1 hour. Okay, all these flags broken down by the gold. Okay, so flag. All right, and let's look at by date. So you're gonna see that more clearly by date. We're gonna see that more clearly by the date. All right, so we've broken that flag on the gold. Okay, this flag, and euro is heading towards that, and the next gold is targeting this. Okay, which is there, 17th of, yeah, so the euro is supposed to be here, and if gold goes down to 33.10, okay, most likely euro gonna continue to keep heading towards that 15.60. okay, so what I'm saying, if we get a pullback on euro like this, or even 3-minute pullbacks, or watching 3 minutes carefully, just have that trade already on the Australian dollar. I mean, I did not trade that, maybe you guys caught that. Okay, but we're gonna keep hitting that, keep hitting for that. Hopefully we're gonna get that pullback. Let's say if we don't get a pullback on this, on the euro, okay, but we see that the gold is significantly falling to the downside. All right, the lower the gold goes, our target can extend further to the downside on the euro. Okay, so gold. All right, these charts to find a support over there, and they supposed to go back up, because they're not going to continue to keep falling as other currencies are falling. Maybe they can find their support somewhere here. All right, and they can start rising to go back up. Will be a buy once we see enough evidence that the buy is coming over there on all these charts. Okay, and silver can continue to keep rising. All right, as silver is lagging, we can see that the silver can claim that high or new all-time high. All right, so if you are trading, you can trade. All right, but our way of trading is different, so we are slightly careful on the silver, as the risk, the higher it goes, carry more risk for a crash. Okay, but very likely that the silver gonna intact its trend and gonna continue to keep rising. So if you're buying silver, make sure you are using stop loss. All right, so you caught that trade. Great, thank you. Well done, Omar. All right, so that's what you need to do. Okay, so copper is all-time high. Yeah, so more upside is likely on the copper. Not trading on the copper, we are using copper as a lead to figure it out where the other assets are going. Okay, so dollar chief is also bouncing back, very much similar like others. Okay, 17th of March maybe can again hold that and then can drag to the downside. Okay, pound chief, I'm gonna ignore these charts, guys. All right, so yeah, so we can go back up. All right, so we can go back up further on this pound New Zealand dollar like this. Okay, we're not trading on that, using them as a lead. Okay, can go back up. All right, so this is, you know, I said that on Friday that this chart is not completed. I mean both all these 8 charts. All right, so euro is falling now. That's what euro was doing on Friday, lagger. When you know that the price gonna go into your way, all right, you can risk anything. All right, when you know. Okay, when you don't know, you're gonna just, you know, hit your head into the walls, this wall and that wall and that wall, and I'm gonna try to figure it out that, you know, what to do. Okay, but when you know that what's gonna happen, and you can get the idea easily by figuring it out that what market can do next. All right, so it's euro is catching up now. Okay, I was saying to you guys, euro is a lagger. Australian dollar first was a lagger, then euro is the lagger. Now euro is making the move. Yeah, so euro is falling here, so maybe we're gonna go slightly lower and then gonna go back up again, back to this low. All right, same on this chart, back to that bottom, and then again we can go back up. Okay, pound is already rising. Pound is already rising. It's giving us a sign that euro also can find it. Euro against these risk on currencies can find its floor somewhere here and can go back up. So if pound goes all the way to that high, okay, euro also gonna rise back later on. Okay, let me find this chart and then explain that chart to you. Let me find that chart. Okay, you're gonna know, maybe you know, gonna get the idea what I'm talking about. Let me bring that chart. When I was saying that that chart was not completed. There you go. Okay, now we are having that move. Okay, they are rising, so the pound is rising here. Right, the pound is rising here. Yeah, so if we get back, look at this, the move is happening here. Okay, the pound is rising and the pound is rising here too. How do I know that this move is going to come? All right, the next chart was telling me that this move was about to come. All right, this is the move. This move has already appeared there. All right, the pound fallen against the dollar, all right, was telling me that the pound is going to rise against the New Zealand dollar. All right, okay, but here we were stuck. Okay, euro was stuck. Euro wasn't following this, the pound, all right, or the Australian dollar wasn't following the pound. The New Zealand dollar wasn't following the pound. Again, now this chart is completing, becoming more clear now. All right, so euro is falling aggressively to the downside. All right, pound is catching, euro is falling against the pound as well. So euro pound is going down. All right, and euro is falling here. Okay, euro is falling here. Okay, they are rising, they are falling. Okay, the Australian dollar is also falling. All right, so our lead is appearing here. Right, this is where we are having lead. Okay, this chart is telling us that bottom is coming soon. I mean, dollar is going to find its floor top soon. All right, my guess is that after the Fed rate, the CN. All right, we're gonna go into that direction. So this is what I'm saying. You know, so euro can go down against the Australian dollar, can go back up, can go down again, can go back up. So lead is appearing here. All right, so lead is appearing over there on these charts. All right, so they can go down, can go back up. All right, go down, can go back up, ignoring. All right, so they can also go down all the way to these lows. All right, similar like the Australian dollar, US dollar, the way they behaving. Okay, these charts also gonna behave that way. So same 17th of July. Here is the 17th of July, I guess. Pull back and drop. All right, New Zealand, Australian dollar is also falling. There we can see that what's happening here, and they are catching up. These charts are catching up now. All right, they are catching up. There you go. Nice trade has already happened here. Okay, pound is also, euro is just keep falling. Nice move. Okay, so they are also behaving this similar way, right? There is, just need to figure it out. Australian dollar US dollar is a copy of this. All right, and the Australian dollar has to fall, all right, against the New Zealand dollar. I mean, the New Zealand dollar has to pick up, so we're expecting this to go down to, not a best chart to trade at the moment. Okay, but this chart at least giving us a clue that the Australian dollar is stronger, caused by the interest rate held by the RBA. Given that it has to go down. All right, and I'm gonna use a very simple chart. All right, on here. Okay, so we don't have a lot of opportunities here. Okay, but what we see, okay, we see the chief against the yen has broken that. Let me bring that chart, right? And I'm gonna sum up the old yen pairs into that one chart. Right, so let's open from here. All right, so there we can see. Okay, so there is a risk that the yen can fall further. Okay, there is a proper risk that yen can crash further. Right, yen definitely can crash a big. All right, and dollar yen can rise against the dollar can rise against the yen. Okay, so if you have seen my chart, this chart, all right, before, hopefully you have seen that. If you follow me on the Telegram, I have shared that chart on the Telegram. Okay, when we were expecting dollar to fall, all right, and we were expecting dollar yen to drop. Okay, here at this area we got a nice drop over there. We were selling the buying the dollar to drop. We were dollar to drop. Yeah, we were buying the euro yen, pound yen at that time, if you remember that. I'm not sure. I have shared that chart on the Telegram. All right, so we are having a similar, you know, divergence again. Okay, so here we can see that the most of the all right, before we had a chief yen. Okay, now I have to bring the old chart, guys. Maybe then you're gonna understand. Okay, so here, somewhere here at this area I posted. Let's try to find from June 20. All right, June 20. June 20. All right, so hopefully I'm gonna get, I have shared that on the Telegram, as well. And there you go, I find it. Gladly I find it quickly. Okay, so this is the chief yen. All right, the chief yen broken through that top was at 180. Okay, 180 at that time, 180.50 at that time. Now it's heading towards 200. All right, broke through that top, the chief yen. And look at that, where the euro yen was. Euro yen was at 170. All right, euro yen caught up. Euro yen caught up the chief yen aggressively for upside. Okay, so if I'm gonna go to the recent chart is here. Okay, where is the chief yen right now? Sorry, chief yen and euro yen. Chief yen is 85, 185. Highly likely it's gonna hit the 200. All right, and the euro yen is at hitting at the 173. All right, so 173. So highly likely, if just, yeah, if 184 minus 173, what comes? 11, I guess. Yeah, 11. So if, you know, if we go to 200, all right, if we go to 200 on chief yen, all right, just add up that 6 to here. Okay, so 179. Okay, 180, we can say that the euro yen can hit 180. Yeah, so euro can hit 180 if chief yen can tag the 200. Okay, so the point here is that where is the dollar yen is sitting? Where is the dollar yen is sitting? At 148. All right, 148 300.300. all right, and where is the weekly top on dollar yen? Here is the weekly top, where at 160. all right, there is a perfect risk for the yen to drop significantly against the yen, against the dollar. Okay, and dollar yen can catch up, can go all the way up to 160. all right, so we were already looking. Okay, there is the trade here going to be on the dollar yen. all right, so the trade here is the dollar yen. We were expecting dollar yen to rise from there. Okay, dollar yen is already up from that 143. Okay, we are already up, having that move already up to 148. Now why yen can significantly fall? All right, why yen can significantly fall? All right, because Bank of Japan, yeah, gold broke out 3,300. all right, I mean hitting 33. Yeah, gold is falling. Significant move. It's almost a $35 move on gold. all right, $35 move. Okay, I come back onto the yen. It's a significant move. Yeah, it's making your case. Let it go, get down. No rush. It's a good move. No rush for buying. Okay, no rush for buying. Okay, but we are having move here. Bang. We got the trade was already here. All right. Yeah. Dollar. Yes. Good. Dollar CAD is a good. Yes. Yeah, that's what I said to you. Dollar CAD is, I can see that the dollar CAD is lagging. Yeah, the only pair behind is the dollar CAD. Yes, good. Look for that to go catch up. All right, if I'm gonna invert that, I'm gonna look at this. All right, so we are lagging clearly here. Okay, go to the 15-minute time frame. Flag broke out. 15-minute. All right, so we broke that flag. All right, and that's what you're watching simply. All right, check if there is any news coming out. No news. All right, so we passed that 1:30 slot. No news gonna come. All right, so we broke out. Okay, and the others broke out too. So silver broke out too. Yeah, so yeah, that's how, guys, this is a live, you know, setup is forming in front of you. Okay, that's how we confirm that to the breakout of these flags. Bang. Okay, something for, okay, gold fallen. All right, this is the move. Okay, so you're looking for, all right, so for further, you know, for further satisfaction, you can use indicator if you want. All right, indicator is telling us that the breakout is not yet there. Okay, how the MACD still can fall below, I mean into the red, okay, below the zero before going to go back up. All right, so simply you're finding floor within these areas. Okay, price to hold and break out this for the next leg. Yeah, the leg is there already. Gold dropped. Okay, dollar gained. All right, gold dropped, dollar gained. All right, but dollar hasn't gained here. Simple is that. Dollar has to gain here. Okay, and CAD has to go down. Simple, no science. All right, and you're looking for a for entries here. Okay, so the short-term target gonna be this top. All right, short-term target. All right, and if you want to further find your target, all right, just simply, you know, look for the measured move. Okay, the measured move, I mean, you want to find the target. Okay, all right, so let's say, okay, this is where the gold started to move. Okay, this date. All right, so the next target, I'm trying to show you the next target. All right, so this area, this place, okay, this same date, pull out your fib lines. All right, up to this top. All right, or let's say, yeah, this top. All right, so pull out your fib lines from this top to this top simply, and you're gonna get the idea that up to which level the next target you can find. So we haven't hit that 127. This is 127 of the fibs. Okay, 127. All right, and 127 is 137.80. Yeah, so it has the potential to go that much far away, even though it is a, I mean, not conservative target. All right, huge target. Okay, but yes, it can go to that much far away. I mean, dollar CAD can go up to one. No, not buying. No, not buying the pound. This is what I'm talking about since last 2-3 hours. All right, so let me check. Let me check how long it's been now. Almost 2 hours and 30 minutes. I'm talking about buying dollar, and you just suddenly came and saying that you want to sell the dollar. All right, so no. All right, no. All right, no, not buying the pound also can break. All right, the pound also can break out like gold has just broken. Yeah, now what do you see here? What do you see here? A same flag. All right, flag broken. Okay, gold fallen. Another broken. All right, broken. Okay, so what you supposed to, let's pull out the moving average here too. All right, so you're supposed to to buy the pound for this move? All right, are you supposed to look for this to go down for another leg? Okay, gold has fallen. Understand this sentence which I'm saying. Gold has fallen against the dollar. Okay, pound hasn't fallen against the dollar. That's a lag, all right? And it's clearly telling you that what is going to happen next. Okay, this flag very likely going to break out. All right, so let's see. All right, so make sure. All right, so this doesn't matter that if you are Elliott wave, then the price gonna go into, I mean, what Elliott wave? All right, she's saying that Elliott wave. Okay, so what Elliott wave does, you need to learn lots of things. All right, you need to learn lots of things. All right, you said that you are not Elliott wave trader, you are name wave trader. Caught me off guard, my apologies, but you need to learn lots of things. All right, so what Elliott wave does, okay, Elliott wave, they just simply put numbers on the chart. All right, let's say this is, just put numbers on the chart. Yeah, let's say, okay, 1 0 start from there. All right, and let's 1 2 3 4 and 5. Okay, it's completed. 5 waves completed. Let's buy. Okay, 5 waves completed. Okay, 1 2 3 4 5 completed. Okay, let's start buying the pound. All right, let's just buy based on that, based on these numbers. All right, so market not gonna follow these numbers. All right, market not gonna follow these numbers, where the numbers you have placed, or the trend at the line which I have placed. All right, market not gonna follow that. These tools are just for you to understand what has happened. All right, what has happened. All right, these tools, cannot move the market into the direction where you have placed the tools. All right, these tools cannot force the market into your favor. These are just tools. All right, they're on the left side, you can see, or these are just tools. Market. So Elliott wave, if you put numbers on your charts, doesn't mean that market is going to follow those numbers. All right, okay, so what I have just shown you, more solid information. All right, that's more solid information. All right, that's a more solid information. Gold has fallen. Okay, what is more solid information? Gold has fallen against the dollar. All right, but pound hasn't fallen against the dollar. All right, glad if it hit the 3460, you're gonna get something out from it. All right, but if you are buying, make sure you're using stop loss. All right, all right, I don't want you to get stopped out. All right, but what we see clearly that the gold is falling. All right, and that's enough for us for the dollar to just keep gaining. All right, means that pound still can fall further. Okay, so where we were here on the dollar yen. Okay, so dollar yen, quickly gonna look at the dollar. All right, dollar, we were looking for buy on the dollar, expecting breakout. All right, so you understand that chart. Hopefully you understand that chart now. Okay, the dollar is lagging. All right, so we were expecting a buy opportunity over there at this area. Okay, and this is the high, this is the high. Okay, this is the lows. All right, and the recent low formed over here. All right, so the old chart I can get out from 1st July. All right, so 1st July dollar yen chart. Okay, so this chart is still valid. Okay, but buying is not there yet. Okay, so we are still looking for this move to happen. Okay, so dollar yen to just follow the others. Okay, so I was saying that yen can fall significantly. What can cause yen to fall further significantly? Okay, right now what's happening over there? All right, so inflation. All right, okay, what's happening there? I'm gonna look at the, then I'll come back to the dollar yen. What can cause that move? So there, okay, the problem is here. Bank of Japan is facing the problem there. All right, and if I'm gonna, let's look at the inflation in the Japan. Where is the inflation? So what's the name? JP, I guess. JPIRYY. All right, so there is the inflation. Okay, so inflation in the Japan is at 330. All right, so 330, inflation in Japan is at 330, came down from, let's look at the exact number. Okay, so came down from 430. All right, 430, and the recent top was at 4. All right, and hopefully that inflation gonna fall after the tariffs on Japan from Trump. If not, okay, then the real problem is here. Okay, now you can see the real problem is that the 10-year yield, the longer term yield, all right, the longer term yield is rising. Okay, so continuously keep pushing up. All right, the 10-year yield is at 160. Where's the inflation? 330. Okay, so yield goes there where the inflation is. Okay, and this is where we have already seen in the past, inflation went up, yield is rising. Okay, and there is a great risk that the yield can jump significantly. I mean, this 10-year yield can jump significantly for upside. All right, this 10-year yield. So technically, all right, technically, in this case, okay, inflation is up. Okay, yield is pushing up. Okay, and we know that on the, all right, so JPINTR. Okay, technically interest rate is at 0.50. Okay, so when inflation is 330, the 10-year yield is pushing up. All right, so Bank of Japan to raise the is supposed to raise the interest rate, all right, towards the where the yields are going. All right, I mean, they are talking about that they're going to raise the interest rate. So technically, based on this scenario, all right, the yen should gain. All right, because they are raising the interest rate. Bank of Japan is raising the interest rate, looking to raise the interest rate, and yield is pushing higher. All right, they want to bring down the inflation, so yen supposed to gain. Okay, but problem is not that. All right, the problem is to refinance the debt. All right, the debt which Bank of Japan, I mean, is buying from the government. All right, or the government issuing the bond. Who's gonna buy those bonds? All right, for Japan to pay off their debt, to refinance their debt, because their debt to GDP is somewhere close to 230%. All right, if they raise the interest, if the rate goes higher aggressively in the Japan, if rate goes higher significantly, all right, they are having 230% debt to GDP. So where the money gonna come from to refinance those debts for the government? That's the real issue is, okay? So for that, Bank of Japan will not let the yields to just continue keep rising. All right, that's the problem. So what they will do, they will suppress the yields to the downside. All right, they will buy more bonds. They are already buying. Okay, they are already buying. We hear news very often that Bank of Japan is buying bonds on spot this day and that day. They are buying behind the scene, okay, and trying to suppress the yield to the downside to keep the debt cost low. All right, so they will not let that yield to run aggressively for upside. Okay, so for that, what they need to do, they simply need to create more yens. Okay, they simply need to create more yen. So creating more yen, okay, for buying the government bonds, all right, can cause the currency to fall significantly further lower. That's the main problem which they are facing, either to save the bond market. All right, to save the bond market. When I say to save the bond market, to push the yields lower, or to save their currency. All right, so what are they going to do? Either they're going to save their currency or they're going to save their bond market. They're obviously going to go after their bond market, and they're going to save their bond market rather than they're going to, you know, save their currency. So currency can fall further. So yen can fall further. All right. So when I say, I mean, they won't. They will save their bond market. Okay. They will not let the yield continue to keep rising simply. Okay, they will not let the yield to continue to keep rising the way it is rising. Okay, last time, okay, when yield went up there again, 26th March 2025, they jump into the market, all right, and bang, it went up to 106. Okay, it dropped from 160 to 106. All right, how you can do that? You only can do that by buying bonds. Okay, you can create that kind of move by buying bonds. So when you buy bonds, okay, when a central bank buy bonds, they simply create money. All right, when they create money, all right, means that they have adding more supply of the money into the system. Okay, when they are adding more supply into the system, means currency is losing its value. Simple. All right. Okay, so it's healthy when the yields are rising. Okay, in a normal environment, when inflation is rising and yields are rising, interest rates are rising, you're simply slowing down trying to slow down the economy. Okay, stabilizing the economy, to bringing down the inflation, stabilizing the economy, so that the consumers cannot pay more. You can keep the prices stable. But in this environment, right, if they let the yields continue to keep rising, means that their debt servicing cost going to be very, very high. All right, which I mean who gonna pay to the government then? How are they gonna, where the money gonna come from for the debt servicing if Bank of Japan stop buying government bonds, let the government let the yields continue to keep rising? All right, so this is where the Bank of Japan is stuck right now, either to save the bond market or to save their currency. All right, and very likely they're going to go after bond market to save their bond market rather than saving the currency. And that's why we see that the yen is just keep falling very, very aggressively, specifically against the chief. All right, against the chief yen. Okay, because Swiss National Bank is not facing that kind of scenario. All right, they are not having that much debt. All right, they are having 0% inflation. All right, and interest rate is at 0. All right, and the most safe currency right now is the chief, more safer than the yen. Okay, the yen was having that title before. But right now, yen is more safe. Chief is more safe than the yen. That's why yen is chief is just keep climbing higher. Okay, so the problem there, that's why you see this huge divergences over there. Some currencies are already trying to catch up the chief yen. Okay, hopefully you understand the scenario, the picture behind that. Okay, so dollar may fall, but yen may fall faster than the dollar. All right, before at the start we were looking at the bigger picture for the longer term dollar drop. All right, but this picture is telling us that the Bank of Japan is in more bad, place than the Fed. All right, and that's why the the why euro, why these two currencies are rising is the yen, the chief and euro, because their inflation is close to their target. All right, the inflation in the EU as 2%, even below 2%, and in the Switzerland, negative, heading towards negative territory, and rates are close to 2%. All right, but that's not the picture at the moment here. All right, not in the UK, not in the Australia and in the US and in the Canada. All right, but they're heading into, their inflation is also heading towards 2%. Okay, so more chances that these currencies gonna catch up for upsides, and dollar yen has the more potential, and that's why we are buying the dollar yen. Okay, when dollar yen is coming to these lows, 142, 143 area, and looking for dollar yen to catch up. And now we can see that the dollar yen is, all right, so well above that 44 areas. Again, trying to head towards that, and broken out that channel. All right, this channel broken out, hit that top. Okay, and next correction is just forming over there. Okay, anytime it can take off, anything can drive it very, very quickly for upside. So the picture is very much similar like gold. All right, any correction you see there, you are expecting that correction to hold and continue to keep rising. Okay, so recent correction formed over there, already went up. All right, and it's just heading higher. So all right, so break through that top or come down and continue, or maybe form that flag and then continue to keep breaking for upside. All right, so dollar yen, every time pull back, you're expecting it to hold and continue to keep climbing up. All right, so CAD yen also catching up. Okay, CAD yen also catching up. These lows, you are expecting these lows to hold, right? These lows to hold, these daily lows. Get target 118, 120. Australian dollar too. All right, these lows to hold and continue to keep climbing. New Zealand dollar, all right, continue to keep climbing. Yeah, so when you look at the one chart, you understand the whole picture, and you staying into that okay, I'm gonna ignore these. All right, and I'm gonna ignore that too. So it is highly correlated to the Australian dollar. All right, the dollar, Chinese yuan, highly correlated. So we saw that the Australian dollar is falling and this is rising too. All right, so highly correlated to that. All right, so EU DAX. All right, so yeah, very much like US equities. Yeah, so correction is due, short-term buying is okay during the day for short-term trades. All right, these lows to hold and go back up, same. All right, sideways market, not trending. The copper is catching up now. Okay, we knew that this move gonna come. All right, but we did not trade. We knew that. All right, okay, now I can see that what's happening. Okay, we were trading on the others. The copper is falling now. copper is falling now. Bang, something has happened over there. There might be a news and bang on. Okay, so the copper was lagger. Let me bring that chart. The copper was a big lagger. The copper was the last one to left to catch up the gold. Now you can see the power of the gold, how powerful the gold chart is. Okay, so here we did not sell the copper. We were more focused on the euro. All right, this is the catch-up move is just happening now, heading towards that 17th of July lows. Very sharp move. All right, so here it's catching, so there is, it's catching up. So I have to open that chart to just show you clearly, guys, that how that gonna look like. I can see that on my other screen. It's just, I'm busy with you guys, otherwise I could have traded on that. $17 this. All right, so bang on, there you got the move. So you have to go to the 1 hour time frame chart. 1 hour, 1 hour, 1 hour. Okay, so scale is, canvas is big, so hopefully you will get the idea on this. I don't need to. Okay, so catching up the 17th of June lows. The 17th of June lows here. Already caught up so aggressively. 17th June. So others are also catching up. Okay, now there is a perfect reason for the dollar cat to catch up the gold and others to catch up there. Okay, still so looking for that move. So okay, so yen pairs. All right, so yen pairs, you hopefully got the idea that the 4 hour time frame or the daily time frame to continue to keep climbing. All right, and another chart. Okay, and these are sideways market. Another chart, another setup, another chart. I will look at that. So I'm gonna ignore the oil. Oil is in a big sideways market. All right, so another chart. Nvidia was, one-way. Nvidia is one-way street. Okay, it was a good buy opportunity when there were tariffs. Okay, so my next chart, the chart which I'm going to show you, is highly correlated to these. All right, highly correlated to these charts. Okay, we can see there that the Nvidia nicely gone up. All right, Nvidia nicely gone up, and Microsoft is also Microsoft is also gone up. I have to go there to my profile to find out these charts from there. All right, so Amazon, let's look at the Amazon. Okay, similar like the chart I have earlier shown you. Okay, dropped, one more crash, and then we start pushing up. All right, and we start rising after another crash over there. Amazon gone up. Okay, let's see the Walmart gone up. All right, and Meta, okay, crash for another leg lower, pushing higher. All right, another crash came over there, then still rising. Meta, and then Costco, all right, made its move again, going down, all right, but still gonna it's still a buy opportunity over here, all right. And indices, okay, indices also pushed up all the time high. Apple, okay, Apple is still stuck over there in this, in the lows, all right, still stuck. Others are hitting that high, all right, or making new high. So Apple is still behind, still lagging, all right. Apple is still behind, still lagging the others, all right. And still got a potential to give us that move, all right, that move, okay, all right, that move. Now let's get back to the US 30, all right, and US 30 and Apple. Apple is facing tariffs, all right, causing the Apple to not follow the others, all right. Apple is having that problem. Apple is, you know, Apple production is coming from other countries. That's the main reason, all right. And if I'm gonna look at the US 30 here, all right, so US 30 is at all-time high, so I have a lot of structure on that. I have to go to the clean chart, guys. Let's go there. Clean chart, US 30, Apple, all right, and all right, so where we are on the US 30, hitting that top, all right. So where is the top on Apple? Here, the next top on Apple here, okay, these two tops, all right. So this is the low, so this top, that top, all right, this top and that top, and we got a tariffs, okay, we got a tariffs too. So Apple is facing tariffs, all right, no solution yet, all right. Soon, hopefully soon, we're gonna get a solution, all right. Trump is figuring it out. So I mean, with the EU, figured it out, they got the deal, all right. Soon they're talking to the China, they said that they're talking to the China, okay. Soon they're gonna, you know, figure it out, a trade deal with the China too, all right. And this is the move, okay, this is the move you're paying attention. This is the trade guy you are looking for on the Apple. Apple is a lagger, big lagger, all right. And that's the main reason, okay, because Apple is lagger, all right. Because of this, US 30 is not, you know, finding its all-time high. It's not breaking its all-time high because Apple is not catching up. Apple is behind. US 30 is pushing up, but not aggressively as it's supposed to do, like Nasdaq 100 has done. Okay, we broke the top, we formed new all-time high. Broke the top, well above the all-time high. US 30, you know, haven't broke that top because Apple is not catching. So Apple is the chart you are paying attention, all right. Apple, if you're trading on stock, all right, Apple is the chart you are paying close attention for the buy, okay. And Apple can catch up at any time and can rise back to this top, all right, from 214 to 260, or maybe well above that 275, all right, well above that 275, all right. So potential is there, so you're looking buy on Apple. All right, guys, so thank you. I think enough long session, all right. And I do have crypto, so we're gonna talk about the crypto next time. I'm tired now, all right. and missed a couple of opportunities while having this. Hopefully we got a breakout. All right, so what happened here on let me check that the gold, okay, the gold chart, the gold is fallen. That's a good thing. All right, the gold is fallen, and I hope that gold is fallen. Yes, fallen 2 here, fallen 2, fallen 2. All right, this is the trick, okay, the trick I'm going to tell you. Okay, we can see there the CAD. All right, the CAD, okay, the dollar CAD. Okay, the trick is, okay, the CAD is not fallen yet. Okay, the CAD, the gold has fallen against the CAD. All right, but gold, and gold also has fallen against the dollar, but dollar hasn't gained against the CAD yet. All right, the reason why it's staying into the correction, because CAD has got some strength against the gold. That's the lead, actually. Okay, that's the lead. That's the lead. All right, that's the lead. That the CAD also gonna get weaker. This strength is giving some strength here on risk on currencies. All right, this strength is appearing over there on the CAD got stronger here. All right, and CAD is staying a little stronger here, but the eventual move gonna be this. Okay, gonna be that's gonna be the move. Okay, I mean, they're gonna run after the dollar gonna be the safety. I mean, the eventual safety gonna be the dollar. Okay, so we're gonna look for this move. That's the setup which appeared over there. I mean, we're still gonna look for dollar to gain the 1 hour correction which have just appeared over there and broken out already on the gold. We are looking for that to continue. Okay, we'll share that setup once they are ready with you guys. All right, so that's it, enough, and we'll see you back into the room. Okay, thank you, have a good day. We'll try to get back again live next time when I'll get enough time. All right, and hopefully you got the idea what to do, guys, for this week. Thank you, have a good day, and bye.